Welcome, folks. This is King Olhc, and today I'll be discussing on how to trade candle number 3 in the candle range theory, the CRT. So let's take a look at this structure first. So we had a break above this high, price return back to the main threshold of this candle, of this other block. So we had a quick reaction to the upside, and price did what also came back down to this other block to support. We want to see price, if we're expecting higher prices, we want to see a measure of reaction at certain key levels to support price reach higher. Yes, so this price return to the open of this candle as a key level. So we have candle number 1, this one as our CRT high, as our CRT low marked out. We had this candle number 2 turtle soup, and candle number 3 as distribution candle. Now trading this is a perfect example of showing you how to trade candle number 3, because a lot of us missed the first entry, which is the model 1 entry right here. I'm using the 5 minute because there's a clearer structure on the 5 minute time frame. And I posted something about power of 3 alignment on my Telegram channel. You can check that out. So this is candle number 1 accumulating, candle number 2 manipulating this candle's range, 4 minute or 2 soup. This will be regarded as our first entry, and our second entry will be a model 1. The last, that will be the other block entry. That's the last bearish candle that purges this low, which is this one right here. A lot of us missed this, waiting for price to come back down here, which it did not. Now trading candle number 3, we have trading candle number 3 is where the concept of open, low, high, high close comes in. So this is where the concept of open, low, high close comes in while trading candle number 3. So what does this mean? If we're expecting bullish prices, we want to see a measure of, I want to see price opening at this level, then we want to see lower prices. This is the week of most bearish candle. The low is the week of most bearish candle. So we're trading in the week. So we had open, low, then high, then a close. So we want to be buying below open prices. If we're bearish, we want to be selling above open prices. So let's take a look at this candle as an example. We're trading candle number 3. So we have, this is the open of candle number 3 marked out. So going on to the 5 minutes, remember this line is the open of candle number 3, and I mentioned something about price forming open, low, high, then close. So now what happens here, this is where you pay perfect attention to what happens here. Now I'm going to remove this so we can see the chart. Now this is zoomed out, this is zoomed in rather. So we have the open of candle number 3, and price did what? Return back to a key level, this other block, not breaking this other block, return back to the 50% of this other block. 50%, we had a push through, then a quick reaction, that's fine. Then price broke this high, forming what? A change in state of delivery. Now after this has been formed, we want to sell, we want to see price come back to a discount zone, to a discount array before higher prices. So what I do is I take my fib, I measure from this last low to the recent high that is being formed before a reversal. Then now I want to be buying below 50% of this range. Looking at this, we had a fair value gap. We also had another block right here. So now your entry zone, your entry paradigm, your entry model comes in here, whichever one you'd like to take, the order block or the fair value gap. But advisable while trading at lower time frames, I basically use imbalances. I basically use gaps as my entry. So my entry will be right in the mean threshold of this, be right here. Then my stop loss will be placed below this low, then expecting higher prices. So that's basically how trading candle number 3 works, or basically how you can trade candle number 3. Now, for some reasons you were not in the chart, you missed this entry. Now, price broke this high but not closing above it. That's fine. Then it returned back to this low as our order block. You missed this also. You see price return back to this low as our so this bearish candle as our order block before you go and move higher, targeting this high. So that's basically how I trade candle number 3. There's a reason why price would not want to, why I would not want to see price return back to this low, coming back all the way down here before higher prices. I'll probably explain that in my next video. Kindly do like and share with whoever. Thank you.